Ladies and gentlemen, welcome back to the markets. The markets, specifically the NASDAQ and AI stocks like Nvidia, are ripping higher here today. Let's talk about the implications of this on AMC stock. I also want to get into where AMC is currently at, what the data looks like, as this is the first trading day of this week. But also, what is happening right now is the House Committee on Rules is voting if they should vote on a debt ceiling bill in the House. Yeah, it's strange. There's a House Rules Committee that is made up of 13 members. They need at least 3 Republican votes to bring this debt ceiling bill to the floor to have it voted on. This is potentially the first kind of update we're going to get to, is this debt ceiling going to pass through the House and the Senate? If it passes through the House, it's likely to pass through the Senate. So today is actually going to be a very big day. So, ladies and gentlemen, let's get into all of this information that you need to know. Hit that like button and subscribe to the channel, not only because Nvidia is now a $1 trillion company, but we are ready for the MOAS, baby. So let's get into this information. So first things first, I want to dive into just that. We got some data today, but I do want to talk about the debt ceiling first, because I think this is a catalyst that could be a black swan event. In theory, it's possible. Is it the most likely scenario? No. But the House Rules Committee is voting on this currently. If they do not let this bill hit the floor, they have to go back to negotiations again. And now that you're heading down to the wire, now that June 5th is exactly, 1 week away to when you could, 6 days now away from, the government actually running out of money. Any opposition to this bill, anyone that doesn't want this, to pass and get voted on in the Rules Committee, is going to be a negative thing. Markets are coming down just a little bit right now. I don't believe we have any news here on this as of yet, but we'll be watching for it. Within the next hour, I think we will get some news on this. But it does say the debt ceiling bill faces a tough path in the House as GOP opposition grows. The compromise bill to raise the debt ceiling faces its first major test in the 13-member House Rules Committee. 2 of the panel's 9 Republicans have signaled that they oppose bringing it to the House floor for a vote. Congress faces a June 5th deadline to address the debt ceiling, or the U.S. government will default. And that's essentially it. You need this to pass through the Rules Committee first, and then it's going to go to a vote in the House. Now, it says, but before a bill can receive a vote in the full House, it must be approved by a majority of the 13-member House Rules Committee, which sets the rules of debate on the bill. The committee is scheduled to meet at 3 p.m. on Tuesday to hash out the rules of the debt ceiling vote. But I actually believe they are meeting right now, or you're getting some kind of news on it. You guys can see markets are starting to take some decently red candles right here after we did just get news on that. They came across the news wire. Now, it says, as of Tuesday morning, 2 Republican members of the Rules Committee, Republican Chip Roy of Texas and Ralph Norman of South Carolina, had already said they plan to do just that and basically not approve this. It says it takes 3 Republicans to side with the 4 Democrats in order to hold up the bill. The panel's makeup is heavily skewed towards the party in the majority, 9-4, a setup meant to ensure that legislation did not get held up by a few dissenters siding with the minority. Quote, workarounds, funny math, and no real cuts. This hashtag debt ceiling deal is weak everywhere it needs to be strong, Norman said on Tuesday morning. A third member of the panel, Republican Thomas Massie of Kentucky, had yet to say Tuesday morning whether he would support the bill. If the Fiscal Responsibility Act were to stall in the Rules Committee, it would re-erect the imminent threat of a debt default with less than a week before the deadline. So really now is crunch time. Any negative news on this debt ceiling bill is going to be seen as a very negative thing for the markets. And it really gets you, I guess, closer to a credit downgrade. I don't think really anyone expects the United States to actually default. When it comes down to it, even if it's the last hour, they will come to a deal. They'll find some kind of kick the can down the road agreement, and things will be just fine. But if we get down to that close to defaulting, you're probably going to get America's credit downgraded, at least by Fitch. We don't know about Moody's. They don't look like they want to downgrade America. But last time we did get a downgrade, the markets fell about 20%. And the day following that downgrade, markets fell 6.5%. Now, where you're currently at in the markets really just don't care about much right now. The NASDAQ is up almost 1% yet again today. And just look at this on a daily chart. I mean, this is like a meme stock. And if you look at this on a weekly chart, the NASDAQ is overbought for the first time since November of 2021. Every time, basically in history, the NASDAQ gets overbought on a weekly RSI, it comes down like a rock, because that's basically showing you momentum. That's showing you that there is no regard to fundamentals when the weekly RSI gets overbought. Unless something dramatically changes and gets much better, there's no reason for this kind of rally. And really, has anything really changed? Not really. If we take a look at the economic data that came out this morning, you will see that it's very negative. And let's go to Tuesday. Let's go ahead and refresh this actually. It's I believe it's the Dallas Fed data that came in today that basically crumbled. Yeah, it's the Dallas Fed Manufacturing Index for May. It came in at negative 29.1. Previous month was negative 23.4, and the forecast was for negative 25. So you've been in negative territory for a while here. And, this is not good. So you're starting to really creep down there, and the month over month changes here are just getting worse and worse. So Dallas Fed Manufacturing doesn't look too pretty. Now, the S&P Case-Shiller Home Price Index year over year is down negative 1.1%. The forecast was negative 0.7%. S&P Case-Shiller Home Price year month over month came in at 1.5%. Forecast was for 0.3%. This is showing the labor market is really good. So it's not really leading to home prices falling because people don't have to, sell their houses. And as CNBC says, maybe home prices are done falling. This is bad for inflation because where home prices are, that tends to kind of equate to higher rents. The higher prices for houses are, the higher the rents. You really need to see home prices coming down. That's what the Fed wants to see. Not good data for the Fed and the rate hike trajectory. Now, if we take a look at the probability of another rate hike, June 14th, 2023, next time the Fed is going to meet, at one point you were factoring in 99% certainty of a pause in June. Now, 63% chance of a hike. So it looks like you're going to get a hike unless this data that we get coming on Friday is, super negative for the economy, right? That shows the labor market is slowing down. Highly doubt that's going to be the case. Unemployment rate for May. This is the data that you're going to get on Friday. Expected to come in at 3.5%. Last month's reading or our current reading is 3.4%. Non-farm payrolls, you're expecting that at 180,000. Last month's reading was 253,000. So from where I see it right now, there's not a lot of justification for what you've seen in indexes like the NASDAQ or even the S&P 500. And since the economy is slowing down and these valuations on big tech look to be in really a bubble, you're probably going to get some downside here. There's really no justification for this. Now, this downside in big tech, when that does come, whether it's this week, the next week, or the week after that, some point between now and likely June 16th, the next Fed meeting, you're gonna see a lot of pressure get put on hedge funds, because hedge funds right now, they're really focused on these big tech names, which is fine and dandy when they're going higher, but when they start to go lower, that's gonna put a lot of pressure on some of their short positions. Because think about it like this: small and mid cap stocks, they've been falling this whole time. Hedge funds have been long on big tech. That has been working. Now, when big tech falls, small and mid cap stocks might actually rise, because the money would just be moving from one asset to another. And if hedge funds are still short on small and mid cap stocks, which I imagine they would be, well, you're going to get their portfolios moving upside down. They're going to be more likely to cover on some of those short positions. So I guess that's my theory. It doesn't have to work out that way, but that's how things look like they're going to work. Now, if we take a look at AMC stock, AMC sitting at 20% short interest of free float, 103 million shares currently sold short, cost bar average 80%, cost bar max 100%, cost bar minimum 55.4%. If we do go ahead and take a look at the option activity for AMC stock here today, again, some of those deep in the money puts are being targeted yet again. For August 18th, $10 put worth $333,000. June 16th, $5 put worth $275,000. Now, what this is essentially doing, and how this can be a bullish thing for AMC, is they're going out and they're buying these deep in the money puts. I'm sure you guys are familiar with that if you've watched any of these videos over the past week or two now. They're going out, they're buying these deep in the money puts. Kind of like a gamma squeeze works to the upside when everyone goes out and buys out the money calls and they go into the money. When these hedge funds buy in the money puts and the stock goes down, it makes market makers go out and short stock. Well, when AMC does catch a bounce and the stock does rally, it's non-discretionary covering, right? So when the price of the stock goes up, market makers will just buy back AMC stock that they have shorted, because they short stock when these hedge funds buy these puts that are deep in the money. Well, it's non-discretionary covering because market makers, they're not supposed to have a bias towards, like, they think a stock's going to go down or go up. As options come in, as people place their bets, they hedge accordingly and make a liquid market. Now, a hedge fund, they have the discretion to kind of cover on their position or not cover on their short position when they start to incur losses. Now, before market makers ever incur a loss, they're going to buy back the AMC stock. So it's very much non-discretionary in that matter of, hey, if the stock price does this many shares will be bought back. You don't know that with hedge funds. You could see AMC theoretically go to $50 per share and not a single hedge fund cover. That's because it's discretionary. Market makers, not so much. So the playing field has definitely changed a little bit with AMC and with these deep in the money puts. So I'm bullish on that fact that if AMC catches any bounce from here, any rally, it's probably going to, you're probably going to see market makers having to buy a lot of shares of AMC. So there you do have that. Again, for earnings here in after hours, HP Box and Sportsman Warehouse, Hewlett Packard, and U-Haul. Couple other names, none of them really important at all. Tomorrow, pre-market, Advanced Auto Parts. Wednesday after hours, CrowdStrike, Salesforce, C3 AI, Okta, Chewy, Nordstrom, Viva, Pure Storage, NetApp, and PVH. Thursday, pre-market, Dollar General, Macy's, Billy B, I think that's how you say it, Hormel Foods, Duluth Trading, and Thursday after hours, Zscaler, Broadcom, and Lululemon, as well as ChargePoint and Dell. So you got some earnings left, nothing too crazy. You really want to watch to see what happens with this debt ceiling situation in Congress. If we look at market breadth today as well, again, very negative. Markets just keep going higher, as you could see from this blue line, and the average stock continues to decline. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I'll see you in the next one.